please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, let's straight away then take it to the movers and shakers at noon, and HDFC Bank is the star today. It's seen a rally of 2.5%, fresh 52-week high on that. Nimesh, should we expect more buying tomorrow, because that's the final day for which the FIs can buy in that restricted list?
Yes, Rima. So tomorrow will indeed be a D-day for HDFC Mutual Fund. It is for the near term, especially from an FI point of view, because tomorrow is a day when a slight window of 1.5% equity is likely to be opened up because of the FI limit, because of the changes in because of ESOPs and all. So that's a small window which will open up for FIs. And what analysts believe, this is the last opportunity for FIs to buy into HDFC Bank, simply because the recent SEBI circular 2 days back suggests that they're stopping the FI window from July 1st. What this means is FI to FI trades cannot happen. Earlier there was a good 4-5% premium on which the HDFC Bank shares used to trade in the FI window. That will stop now. So essentially tomorrow is the day when FIs can buy. So that is one trigger to watch out. After that, I guess the next big trigger for HDFC Bank will be the QIP issue. I believe it will be a mix of both ADR and domestic in the same ratio because of the FI restrictions, but that will be the next trigger to watch out. I guess tomorrow is the D-day, but maybe, since the stock has rallied from yesterday's low to today's high, maybe tomorrow when the actual window opens, within a few hours, I believe the limit will be hit and will be again back into the FI ban list. So don't expect too much of a frenzy tomorrow. But I guess that's the last day for FIs to buy into HDFC Bank stock, given that there will be no further FI window available for FIs going forward.
Okay, so HDFC Bank moving on the back of that development, that if you want to buy, you need to buy now. The window is going to shut down soon. Thanks very much for getting us those details, Nimesh. Let's move on. The next stock that we are focusing on right now is Orient Cement. The stock is holding up very nicely in positive territory, about 8.5% high. We should get an intraday going as well, a 1 year as well as a intraday graph today to give a sense of the price action. A big uptick on the stock coming in. Now, the development is that this company has called off a deal to acquire 2 cement units from the JP Group. We caught up with Deepak Khetarpal, MD and CEO of Orient Cement, to understand why they have given up and what their next focus is going to be in terms of growth for the company now that this deal is off the table.
The transaction was actually to be done through an agreement that we had signed 31st of May last year, with a very clearly defined long stop date, because there were tens of conditions precedent to the transaction, which they had to fulfill in the 12 months time there that we had agreed that that's the maximum time allowed. And in the last few weeks also, we've been following through. We've had several meetings, but no clarity emerging in terms of when will the conditions be fulfilled. As of now, they had not reported fulfillment of any condition. And there are tens of conditions, you know that, including seal authority approval, including the split of the land from the power ventures. And there are many other conditions regarding the bankers' approvals and the other statutory approvals that everybody needs. So we have not received any confirmation of any fulfillment of any condition at all.
All right, let's move on then. Adani Power making losses at its Mundra units. The investment of Adani Power is completely wiped out in Mundra on the back of these losses. And now it appears, according to reports, that Adani Power's Mundra unit in particular could be heading towards insolvency. Anisha joins us for more on that. Anisha?
Well, yes, Rima, that is what we are picking up from reports, and it can be an important development for the company if it is true. We haven't individually verified the reports, but this suggests that the Mundra unit of the company or the subsidiary of that would look at moving to NCLT for bankruptcy protection. Now, it's no secret that Mundra Power Plant has been the Achilles heel for the company. In the entire debt of 45,000 crore of the company, around 20,000 crore comes from Mundra. They had tried giving 51% stake to the state government. They had also looked at an option wherein the state government will pay only the fixed cost and they could get imported coal directly from the government. Now, none of these options worked out, and as a result, the company had stopped operating units of Mundra Power Plant. In fact, the PLFs had dropped to around 30% level versus the 70-80% levels that we had seen. Now, the problem is that aggressive that even if the company continues using the unit or not using, it causes loss to them, and that's the reason perhaps why the company is evaluating an option to going to the IBC, because remember, that will give them a 180-day moratorium period where they will not have to pay interest. And if they're not able to find any resolution by the end of 180 days, the lenders can sell off that unit. Now, right now, they're not finding any buyers for that given the losses that it's making. So perhaps the lenders could be able to find a solution. But as of now, we have not verified it. Let's see how this progresses. Back to you.
Okay. All right. Thanks, Anisha, so much for that. Let's move on. Earnings in focus. Another management that we caught up with. Berger Paints fourth quarter numbers came in above estimates. Margins were quite strong. The tax rate, however, came in higher. We caught up with Abhijit Roy, MD and CEO of the company, on some of the highlights of the quarter gone by and the outlook going forward. Take a look.
We have rolled out, two products, in the exterior segment called Weathercoat Anti-Dust and Weathercoat Long Life. One for the coastal belt like Kerala, West Bengal, Andhra Pradesh, and the entire coast, that is coastline that is there, Maharashtra also, Gujarat. And the other is for the hinterland, which is anti-dust basically, because dust is major problem. So these two products, have been rolled out last year, doing quite well. Marginal gain has happened, around 19% is where we stand now.
Okay, let's move on and get a handle of some other stocks that are making headlines today. Anisha joins us once again for that. Anisha?
Well, thank you, Rima, for that. I'll start with Coal India. That stock was up around 4-5% at the start of trade, and that's because CLSA has raised the target price on the counter to 360 versus 335. They've also upgraded the target to buy versus outperform earlier. Now, CLSA has also upped their target when it comes to ONGC. Now the target stands at 240. Now they basically say that despite the weak results, their valuation factors crude at being $53 per barrel, and we know right now it's standing at around $78 per barrel, and hence they've increased the estimates for that particular counter. Moving on to other stocks that are in news, LEEL Electrics is down about 12-13% after it posted a loss of 250 crores versus a profit. There is a bit of exceptional loss, but nonetheless the revenue is down for the company. Talking about some other weak results, we have V-Guard as well as Suzlon being in red in trade today. Atlanta is down about 20%. The report suggests that company's auditors, which is PwC, has resigned as auditor, so that's one interesting development there. Moving on to a lot of buzzing stocks, Dilip Bilkon, the journey, the downtrend actually continues because that stock saw double-digit decline today as well. Same is the case for Shankara, which was very volatile. It was down about 20% at one point of time, recovered intraday and was holding in the green. CG Power, Nandan Denim and SRS are some other stocks that are very active in trade today. Back to you.
Okay, thank you very much for that. We're also looking at Reliance Communications. That stock is higher by close to about 6.5%. The key headline is the company can now exit the insolvency proceedings after the NCLAT yesterday stayed the insolvency proceedings against the company, which were initiated by Ericsson. The company's gotten into a settlement with Ericsson. They will be making a payment of 550 crores to Ericsson versus a due of about 1,100 crore rupees. Because of this settlement, the company can now get out of the insolvency proceedings. The benefit of that is the company can now go ahead and sell its wireless assets to Jio for 18,000 crore rupees, bring down its debt, and therefore it's positive for banks as well. On the side note, the company has also reported its Q4 losses, a big loss of nearly 20,000 crore rupees in the quarter gone by. But the street focus is on that stake sale to Jio, and that can go ahead now.
Okay, so Arcom right now looking at that big relief rally that's underway. Let's move on now and look at one more stock. Satin Credit Care posted a good quarter this time around. It was a good show on almost all fronts. The gross NPA for the company actually came in quite lower. We caught up with HP Singh, founder and MD of Satin Credit Care, to get a sense of the outlook for FY19. Take a look.
I think we've given a guidance of about, again, a 40% plus growth in our AUM for the year FY19. And it's a sustainable pace. I think, probably the cue is from that, the rural economy did pick up in the last 6 months or so. And giving the talks of the normal monsoon now going forward, I think the rural economy will have a further impetus. And that's also one of the key reasons for us to look at 40% plus growth. We've reached a critical mass where for us the net interest margins will remain probably stable at this point of time. Though there is a slight pressure which is coming in terms of our cost of funds which are coming in, but I think we'll be able to weather it by maybe reducing a little bit of our operating costs. So in fact, our OPEX would be down as compared to our last year. So I think we'll probably be able to stabilize that. We wrote off about 180 crores in the last 1 year as such. We still have a slight unprovided for figure which is left across over there. And I think during the course of the year, I think that will be taken care of in terms of that. That's why we've given our guidance for our ROA for about 2.3% plus. So the unprovided portion will be, I think, factored in the whole year as such.
Okay, on that note, let's quickly recap the buzzing stocks today. We have HDFC Bank on the list, of course, Adani Power, Orient Cement, Berger Paints, Coal India, ONGC, Leel Electricals, which is reeling under pressure because of those numbers, V-Guard, Suzlon, Atlanta, Dilip Bilcon, Shankara, CG Power, Nandan Denim, SRS, Reliance Communications and Saturn Credit Care. Let's focus on one more company. The management that we are now going to talk to is Rolta India. The stock is on our radar after posting what was a weak set of earnings this quarter. Revenue was down about 20%. Margins have also contracted. KK Singh, Chairman and Managing Director of the company, is now joining in. Mr. Singh, first, if we could just, get, your quick synopsis of the margin contraction and the expectation for the trend as we're already in the first quarter of this year.
As a matter of fact, we are... as we see, we are doing all right. How we are doing all right, let me just explain you that with our limited resources, we have been trying to go into digital technologies. And we have very successfully done over a period of time. We have developed a lot of IPs, a lot of solutions. And today our India business, almost 80% comes out of digital technologies. The complete revenue out of that is coming out of digital technologies. Starting from, it was almost 5-7% few years back. So that is the kind of change we have done there. Internationally, of course, it's come to the extent of about 40%. So overall, when you see the consolidated, it's almost 60% that has come there. So in the domestic market, in the standalone market, we have done almost 50% growth on net profit.
So before my colleague moves on, there are a couple of other questions that we also want to discuss. Just on the financials, FY18 obviously has been challenging. Revenue is down 10%. There's a loss. Can you give us basic projections for FY19? Top line, and are we going to see profitability immediately from Q1 onwards?
Yes, the profitability will be certainly better. There is no doubt on that aspect. And the top line, we are not very much focusing. We are keeping the top line almost, as I have been saying in the last couple of interviews here itself, that we have been keeping top line at a control because we are taking away a lot of traditional business, a lot of system integration business. We are taking that out and we are putting this new business which is more profitable, which is better.
But these new businesses are not which are supposed to be more profitable, they're not reflecting in the numbers, right? Your margins, as Surbi pointed out, have come down. There is a loss this time. And also, if you could just quickly tell us, the auditor's drawn attention to this unbilled revenue to the tune of 1,000 crores. How soon can you sign that contract?
Yeah, I think that should be done during this current year, this year.
Okay, so is that the only contract which is sort of up under some sort of a question mark?
There is no question mark on that. It's a project which has been awarded by a very reputed and large agency, I can't name it. And it is being done as per the specifications and as per the directions of the agency. We are doing it. So there is nothing wrong about it.
If you could tell us some more details, sir, this particular contract, 1,000 crores, because it's a huge add to your top line if it comes through. Which particular business vertical does it fall in? I mean, in the 4 quarters of the year, we're now approaching June. So by when can we expect clarity?
I just want to be, this is strict NDA on that. So I just won't talk about it, but I'm telling you this is something which is generally known, but I would not talk about it.
But sir, if I strip out this 1,000 crore from your full year numbers, your revenues would be closer to 1,800 crore rupees, which would compare with over 3,000 crore rupees. So that is a very sharp decline.
It was there last year also. So this is a project which is going on for a couple of years.
And you've still not managed to sign the contract?
It has to be only signed at the end. So that is a part of that. Because that is a procedure, that's the process, it's a defined thing. So there is nothing surprising about it. But this is only because the contract is not there. Therefore, they have said since the contract is not there, and if that's a qualification because of that only. It has nothing to do with anything else.
What is the debt now, just to move on? The debt on the company's books now?
Debt on the company is almost same what it was. As a matter of fact, maybe it has gone down by 100.
How much is it now?
It's about 5,000 crores or so. But it has a lot of bonds over it. And we are working on the bond part of it as far as the restructuring is concerned. We are still working on that. I think if we are able to succeed, then during this year we should be able to do something.
Okay, but your finance cost continues to remain very high, inch up on a year-on-year basis. What's the company doing to bring it down?
That exactly is if we are able to restructure the bond at the same time we are looking for disinvestment into our defense business, because that's a very solid business, and we are getting good traction there. So
what is your defense order book now, sir? Because that's a business that you've been bullish on for several quarters. Where does that order book stand at the end of FY18?
The order book there is very good. As a matter of fact, it will be running into a couple of thousand crores. So that order book is very good. And we are. And
the revenue flow, the execution and the revenue flow?
Revenue flow and execution is a bit erratic there. But that is the only thing in defense which is the issue. But otherwise, that's a good business. We are very, very, very bullish on that. And I believe that as we go forward in next couple of years, it should mature into a very large project, which we have been calling Battlefield Management System. That once comes in, then that's about 12,000.
You've been open to divesting stake in your defense business and raise money for many quarters now, but it's not materialized.
We are also waiting ourselves, because we have to see that we are not looking for just the divestment. We are looking for a strategic partner who can come and really take the company along with us to the next stage. We are not giving the majority to him. We are only going to give a minority stake to him. Okay. So for that angle, we are very, very choosy in terms of getting somebody who has a complete same style, same thinking and same technologies to take us with, not a very new area. We are very good in software into all the domains, if you see, whether it's war gaming, whether it's tactical operations, whether it is digital technologies for defense, whether it's artificial intelligence for defense. We are doing all those kind of things. So FY19, just to sum it up, running a little short on time, for FY19, what can you promise your shareholders now? You said profitability should happen in the first half of the year itself? Yes, the profitability will be there. There's no doubt on the profitability.
But revenue would be flat because of the ongoing changes.
Revenue we are not really looking to chase to increase it, because we are looking to even cut down our other type of system integration work further and further. My aim is that from 60% of what we have today as a total digital kind of thing, where we get much better profitability, we want to take it to almost about 80% overall.
So, sir, leave us with a number. You ended this year with a top line of about 2,800 crores.
Yeah.
Once you chop down the businesses that you're trying to go away from, you're expecting that 1,000 crore order to come through, which didn't come through last quarter. So, what is a top line number that one should expect from Rolta in FY19?
So, the top line number, I would believe, should be in the range of about 3,000 crores.
Okay.
And the profitability should be also in a good range. Okay. But certainly, I'm quite hopeful for the current year, and we hope that it should work out.
All right, Mr. Singh, we'll leave it to that.
Thank you so much.
Thank you very much for your time. That's the word coming in on Rolta. Hopeful for a better FY19. Get into a break then. On that note, on the other side, Ashwini Gujral and Rajat Bose.